Hi everyone, this is Rob Roy of LA Wave Options. Well, the month of June is in the books, and the challenging nature of trading the markets remains for June for the entire year of 2022, actually. But our performance for the month of June was pretty strong, even considering the market went nowhere. In fact, it consolidated in a triangle throughout the month of June. Our performance, however, was highlighted by good performance in the impulse strategy and followed closely behind by our new AI-based time strategy. Now the thought may be, well, if the market consolidated in a triangle, there must have been a lot of strangles in the volatility portfolio. When in actuality, there were no trades issued in the volatility portfolio. That's because the VIX remains stubbornly high. It's not our MO to force trades, and we're not going to do that. But I promise you, the volatility portfolio will come back with a vengeance as soon as that volatility comes back down. I've put this presentation together to highlight in more detail our performance for the month of June. So let's take a look at our track record update for the month of June. We are required to show you our disclosure/disclaimer. If by some chance this is the first time you've seen it, please take a screenshot of it and read it in detail at your leisure. So our overall Elliott Wave Options performance for the month of June 2022 was a positive one. You can see from the graph on the left-hand side, we continue to move from the lower left at inception in January of 2018 to the upper right up to current. We did have that vertical move upon the release of our new AI-based time strategy, but we've resumed the more 45-degree angle incline since inception. But as I said, June was a positive month, delivering a $964 realized profit overall for the portfolios, which was a 29.3% average return on investment. These figures are updated and disclosed on our website monthly. You can always find them there. And as a reminder, they're based upon trades closed during the period for our Elliott Wave Options strategies. So when you take a look at our colored graph there, you can see that the impulse strategy was leading the way just barely. As we break down the portfolios, I'll be able to share that with you. Looking at our P&L by trading days, you can see we were kind of steady there for the beginning of the month, then had a bit of a run, leveled off through the middle towards the third week of the month, had a little bit of a spike there, and then leveled back off towards the end of the month. When we break it down by strategies, you can see there on the level 3, the impulse strategy led the way, but just barely. The time strategy in level 1 there, certainly carrying its own load as well. Note that in the volatility strategy, no closed alerts during the month of June, and that's due to that elevated VIX. We're not going to force trades as much as we like the triangles, as much as we like the breakouts, as much as we like the way we do the strangles. You can't force them. You can't buy the options when they're too expensive. We will have plenty of opportunities in the volatility portfolio. But note that if you are a level 1 time strategy subscriber, the value of having level 3, including both the volatility and the impulse, is the performance of the impulse strategy. It has been carrying the portfolio over the past couple of months, and then serves the totals for the $964 portfolio in general, up 9.6%, and the average return there at that 29.3% that I mentioned in the beginning. So the trade alert activity broke down like this. You can see the color coordination there with the different strategies at the bottom, the orange being the impulse trades, the tan or gray, however you want to view that color, being the time strategy, and then the blue being the volatility strategy. And then you can note over the months of both May and June, there haven't been any closed volatility strategies due to the volatility in the markets. So in general, our trading activity was lower than average in June. We are picking and choosing our spots, and I think overall we've done a pretty darn good job when you see the highlights almost every day of some hedge fund or some big institution going out of business, declaring bankruptcy, etc. We've been really keeping most of the powder dry, just jumping in here and there, and that's the way to do it when you have these uncertain times. The impulse, as it has been the past couple of months, was the most active strategy. Given those market conditions, when you have the volatility, you can get some directional moves here and there. No new alerts in the volatility strategy. And as a reminder, once again, no figures including the speculative alerts because they are not based on any of our published Elliott Wave options strategies. So let's take a look at our record based on the individual strategies. Level 1 is our time strategy, level 2 is volatility, and level 3 impulse. So level 3 includes time, volatility, and impulse. Level 2 including time and volatility. So you can see the place to be recently has been, especially for the month of June, has been level 3 because we had a positive return from both the time and the impulse portfolios. So that would have made having a level 3 well worth it. So when we take a look at our graph here of the time strategy, 6 trades completed, 83% win ratio, $442 realized P&L for an average trade return of 20.8%. 50% of the trades required an adjustment due to market conditions. So people often ask about the adjustment process. Well, look at this. Look at these numbers. Let's just talk about this for a second. Half of the trades in the time strategy, which is quite unusual because historically, going back for the 20 years of data that we researched and then the over a year that we were doing this live before releasing it to our subscribers, we've made very few adjustments. That's telling you the difficulty in the market conditions lately, but also the positivity of doing adjustments. I'm just not going to abandon doing adjustments on trades. So half the trades were adjusted, and you can see we had an 83% win ratio. So I think right there is justification for doing the adjustment process. Well, if you're going to adjust half the trades, I think it makes sense that the average time in the trade would increase, and it did for the month of June. So here's the scaling on the bottom. Again, the amazing performance that we had at the end of 2021 from the time that we went live on the subscription basis in September of 2021 to looking at 2022. Still not a losing month in the AI-based time strategy. No return for the month of May, but a nice bump back to 20.8% in the month of June. So pretty incredible track record on the AI-based time strategy all in all. This won't take long, talking about the volatility portfolio, because no trades completed, so no return. And that was also the same for May. And I've talked about in our recording so often the amazing amount of time that the volatility index, the VIX, has stayed between 25 and 35, hitting 35 numerous times. It's a heightened state. I don't like to do the strangles with the VIX above 25, so when it's there, we're not going to force it. We're not going to do it. But if you go down and look at the line for 2022, even though there really hasn't been any alerts in May or June, you can see we still are positive for the year, which is pretty impressive considering how crazy the year of 2022 has been. So this is only the volatility strategy. Remember that. So it's only one strategy, and that's the beauty of having a level 3 package, is the other strategies make up for it, like the impulse strategy. You'll see quite a bit different numbers here. So in the impulse strategy, we did close out 2 trades. Both of them were winners. So $522 realized P&L, 55% average on the 2 trades, and only 21 days, which is actually on the lower end of the time in the impulse strategy. Note that we normally talk about 21 days in the volatility strategy and in the time strategy. So bringing that time frame down, again, offsetting the fact that the time frame went up a little bit in the time strategy, it came back down, and everything balances out. So we talk about this so often. That's why we have level 3, and we have the type of different strategies that we have. They complement each other. When one's performing, maybe another one's not doing so well. When one's not doing so well, the other ones are carrying the ball. And when you have that kind of a balance, that kind of a complementary scenario to your strategies, you get the kind of graph that you see there, where we continue to add to the profitability of the overall portfolio. So look at the impulse portfolio down here. Now you saw what had occurred in those months in 2021 on the volatility portfolio. Look at the results here in the impulse portfolio. See the difference? Carrying the ball. Look at January of 2021, 172% return. That was one heck of a month that we had back then. And then in July, 98%. That was a losing month in the volatility portfolio, but the impulse made nearly 100%. So again, you see the complementary aspect of the months, and note how the impulse portfolio has really been carrying the ball since inception, and specifically since 2022. It tells you the power of Elliott wave and the Fibonacci ratios, even in a market that's as choppy as this. The market has been very difficult. It continues to be difficult to trade in the year 2022, and you don't have to just sit here and listen to me. All you have to do is look at the financial networks, the headlines of the funds that are going under. Almost every week there's another headline along those lines. So we stay focused on our strategies, rely on the long-term performance, and hopefully by looking at our longer-term performance, even when we have these unusual times, all in all, I think we're doing great, and I hope you feel that way as well. Even if our output is lower and our performance is lower, we're still in the game. We're still keeping a lot of powder dry, and I think that's really important. Our mix of strategies with the diversification is what's proving successful. And as I was just highlighting, when one strategy isn't working out as well, the other strategy is there to pick up the ball and carry it. So we're not going to overtrade. We're not going to push trades out just to keep the volume up. If that's what you want, if you just want your email filled up with trade alerts, go somewhere else. That's not what we're going to do. If they're not there, not going to force it, not going to push it. That's our methodology here, and since inception, it's worked pretty darn well. So I wanted to take a few minutes to go ahead and give you that update. I hope you found that informative. Look forward to talking to you again soon. Take care, everybody.